Hello traders, welcome to another episode of our weekly Forex Forecast. And today we're going to be looking at the usual pair that we normally analyze. That is the DXY, EURUSD, GBPUSD, and finally we're going to take a look at USDJPY. So even before we go to our analysis, let's just start with the economic calendar. And this is for the coming week, March 17th to March 23rd, 2025. So what do we have on Monday? These are the news that we're going to be having. We're going to be having the retail sales. So we should expect some volatility to kick into the market, but it shouldn't scare us. On Tuesday, we're going to be having the building permits and the housing stats. So they do move the market, but not that much. We don't trade the Canada. Um, on Wednesday, we have some really, really interesting news. So we have the BOJ interest rate decision and also the Fed interest rate decision. So on Wednesday, I would suggest let us stay out of the market because these two usually, especially for this currency, but by the time we are waking up, this will already have been announced. So I do see how it can affect our the USDJPY, but normally it doesn't concern or it doesn't really affect my trading because by the time I'm waking up, the news will already have passed. But this one, the Fed interest rate decision, I think that is important. Okay, so if you can avoid trading on this day, just avoid or just get out of the market before the Fed interest rate decision. So other than that, on Thursday, we do have BOE interest rate decision. So this week, we do have these major news. So I'd highly suggest if you can just stay out of the market and then let's just wait for the market to stabilize. Because there's a lot of volatility that will kick in into the market for during these 2 days. So we have on Wednesday and Thursday. And then finally on Friday, we're gonna have CPI kinda for the Japan or for the JPY. So yeah, it's a week that's gonna be heavy. It's a week that you know, it's a week that we are expecting a lot of volatility. So if you can just if you can just avoid trading during next week, I would highly suggest you do so. Or if you can just avoid trading on these 2 days, especially if you're doing USDJPY, if you're doing GBPUSD. I'd highly suggest just let the market play out. And once everything stabilizes, then you can get into trading. So other than that, let's just go ahead and look at the DXY. So looking at the DXY, if you haven't watched my video, I'd highly suggest that you do so because this is more or less like a continuation of the video that I released on Wednesday. So just go check it out because I'm just gonna be referencing that video quite a lot. So let's just get right into it. So on Wednesday, I did mention that this would be this high right there, and this is the internal protected high of the 1 hour. So let's just adjust that. I did say that if you are looking for the market to go, or this would be a filter or a guide to show me that there's a bullish intent from this zone. All right. Why? Because this was the last point of supply. This is what was the last point that we saw the market, or that we saw an injection of volume to the downside or an injection of sell orders. And this was kind of like the protected zone. All right. So if I saw a situation where the market actually comes and breaks that, even with just a week, that signals to me that the orders, or we have a bullish intent, and the market may actually be reversing from this, or we should be, or that is a good sign that we may get a retracement from that level. So I would have, of course, loved to see a break and close above that level, but even just that weakening, it shows me that it is a strong the demand from this area, it is quite strong. So how should we approach that? Now going forward, I think if we can just see this move sustained, then we are looking at a situation where the market may pull back all the way to some of these some of these supply levels. All right. So these especially given the fact that we do have the interest rate decision, I think that may move the market. If we can get a positive reaction, or if we can get the dollar to retrace, then we are looking at a situation where we may see the market actually coming to retest some of these supply level. So now moving on to the next week. The trade idea that I'm seeing playing out is a situation where we get that pullback into some form of demand level, and then continuation now to the upside, and this should give us the phase B moves, because all we're just waiting for is for the phase B moves now to kick in. So what are some of the demand zones that we should be looking at? At the moment, I'm seeing these sell to buy wicks being, although it has already been retested, so we may see the market actually dipping a little bit lower. Okay. But yeah, so far so good. I'm liking this zone. Then, from there we can continue now trading to the upside. All right. And maybe perhaps this could be just the efficient pricing, because what we are seeing now from this zone is a clear push to the upside. Um, what I would have loved, or what I would have loved to see, and to maybe consider the zone as retested or mitigated, is the factor, or not the fact, but what I would have loved to see is a clear push to the upside, and then a slight retracement from to the zone, and then continue pushing to the upside. But I'm quite sure if we go to the lower time frames, we do have a nice and clear demand zone that we can work with from this zone. Okay. So let's just go to the 1 hour. Let's just go to the 1 hour. The 1 hour, remember, we are trading the internal of the 1 hour. Okay. I don't know what happened. We are trading the internal of the 1 hour. All right. Even though the market never broke, actually, if you can just see that, the way that I trade the internal structure, I would have loved to see, for me to consider it broken, I would have loved to see the market closing above that line. Okay. So right now the structure is intact. Okay. Right now the structure is intact. And yeah, and I think this is very, very important. Right now the structure is intact. We never broke to the upside. So that means that this trend, or the internal trend of the 1 hour, is still bearish. All right. It is still bearish. I would have loved a situation where the market actually breaks and closes above that. But the fact that we never did that, it tells me that the trend is still bearish. Okay? The trend is still bearish. So how should we trade this? So this is where you see that conflict between what you're reading, the price action that you're getting from the daily, and the price action that you're reading from the 1 hour, the lower time frames. And that is why we need to do that, what is it called, the multi-time frame analysis. Because at the one on the daily, we are seeing the market actually giving us that bullish intent. But now if you just if you jump to the 1 hour, you can see that it was just a weak break, yeah. And that the trend, the main trend, which is the internal trend of the 1 hour, has already been, it is maintained. All right, it is maintained. The market never broke to the upside. we just weakened, took out the liquidity. Yeah, we took out the liquidity, and then you can see the reaction that we are getting. I would have loved to see a situation where the market actually breaks above, right? If we could have gotten that break above this internal protected high, then that would suggest, or that would be a really, really strong signal that there's a bullish intent in this market. But since we never got that, then I'm willing to trade, and I'm willing to take my risks and trade to the downside. Okay, until we get that bullish intent, a strong bullish intent, I'm still gonna be looking at a continuation of this bearish trend. So how should we trade this? I'm seeing the market actually coming to that zone and then reversing from there. Okay, and then reversing from that level. Just delete that. So that is the situation that I'm seeing. As long as we respect these, as long as the market never took out these, this is the situation that I'm willing to trade. Of course, I could be wrong, because we may see, especially given the heavy volatility that we expect next week, we may see the market actually, breaking and closing above this. But as long as that doesn't happen, then I'm willing to maintain my bias, my bearish bias. All right. And then of course, we did mention that we do have a reason to go to the downside. As you can see, we have these fair value gap at that particular level. We also do have this unmitigated order block. Okay, so it wouldn't be surprising to see the market actually moving to the downside. Okay, to mitigate these levels and also this fair value gap. So it wouldn't be surprising for that to happen. Yeah, and that is how I am framing that idea. Well, it is good. It's good that we are getting that bullish intent, but that could just be a grab of liquidity, and then we can see, oh, we will get a continuation to the downside. Okay. Yeah. Yeah. So that is how I am approaching, and that is the beauty of actually moving a time frame lower, right? Because yeah, that is the beauty of moving a time frame lower. And that is my analysis in regards now to the DXY. I'm still holding my bearish. Yeah, I'm still holding my bearish outlook for the DXY until this changes. That is how I am approaching the DXY. So moving on to the Euro USD, let's just do Euro USD first. And this is the daily time frame. Looking at the daily, yeah, you can see so now looking at the daily, this is the price action that we are getting. Last week or on Wednesday, I did mention that we may see a reaction from this level, especially given the fact that the last time price retested that level, this is the reaction that we got. So it would only be natural to expect some kind of a move, even though it is not a fresh zone. And you can see the market actually mitigated the mean threshold of that order block. The last time that we were here, it never did. It almost mitigated that, but right now we can see the market actually mitigated the mean threshold of that candle. And you can see the reaction that we are getting. This could just be a pause. This could just be a pause in price action, where the market is just taking a breather and creating some more liquidity above this zone, and creating some more inducement for the zone that is above, because ultimately this is the fresh zone. This zone had already been mitigated by this move. So this could be very, very well be an inducement. Okay, an inducement to induce early sellers into the market, targeting what? Targeting this zone, or targeting those are the sellers to be used as inducement or to be used as liquidity for us to trade into this zone. So and actually, even looking at the price action at the moment, you can see that um, it kind of is giving us that signal that the people who sold from this zone could be taken out. Okay, could be taken out. And the reason why I'm saying that is because you can see this demand zone is holding, right? This demand zone, we came in, retested or mitigated that demand zone, and you can see the reaction that we are getting now from that zone. So how should we approach this? The way that I would advise for us now to approach in order now for us to get that the sellers are committing or the sellers are the sellers are committing in this market is just to wait and see whether we get the fractal protected low to get taken out. If we do see a situation where the market actually takes out the fractal protected low, then that is a very, very strong signal that the sellers are committing. All right, the sellers are committing, and we can sell now confidently. So if we move to the 1 hour, and I remember I did send out this trade idea. We were looking at this zone. So first of all, let's just see what the 1 hour has. So we are trading the internal of the 1 hour, and as you can see, the internal is quite bullish. We are bullish, and we are maintaining that bullish bias. So we broke structure to the upside, retraced all the way, and then the next we are waiting to just now put in the next the continuation phase, because this is phase A, phase B. All now we are just waiting for is phase C. And that phase C, the market actually gave us the market or price gave us that bullish intent. The moment that we broke above the moment that we broke above that fractal protected high, that was a bullish intent for us. Okay, that was the bullish intent for us. It means that this level or this demand level is strong, and we may continue looking for the buy opportunities, because and it's very simple actually. If you really think about it, I told you the market moves in a kind of an ABC move. Okay, so this was move A, and let me just illustrate that. I think we can even use the edit. So this is phase A, all right? This is phase B. That's sort of a thing, yeah? So phase A, phase B, phase C. So this is what we are trying to get into, okay? This is what we are trying to get into. It's very, very simple if you think about it that way. So that is the ABC move. So we are trying to get the C moves, okay? So how or what can we see? The market came into an area of value, and from there you can see the reaction that we are getting. So any pullback into some of these demand zones. So we have that demand zone. We also do have this extreme demand zone. So any pullback into some of these areas of value, then what we should be expecting is to buy. If we move to the 15 minutes, and then we do have some nicer, you know, nicer demand zones now to work with. So right now we do have these decisional demand zone, and then we do have these extreme demand zone, and this could be very well be used as inducement. Okay, these low could be used as inducement for these extreme demand zone. So those are the two areas that I'm looking to get involved in the market, and I'm looking to buy this market all the way to the upside, all the way targeting that demand, sorry, that supply level. Okay, or that this high actually, that should be the high that I'm targeting. So that is the idea on Euro USD. Let us move to GBP USD. GBPUSD. As you can see, GBPUSD is also bullish. And if you want to understand the price action on GBPUSD, I would highly suggest that you go and watch our previous analysis videos. And GBPUSD quite bullish. We are following this internal structure on the daily time frame. So as you can see, we've maintained that bullish outlook for the GBPUSD. Right now, we've tapped into that supply level. Of course, every time we should expect to get a reaction, and this is the reaction that we are getting, even if it is just a brief pause. Yeah, that is a reaction that is expected from that zone. Of course, I did mention that even though we may see the market actually, and a lot of people were telling me how they wish that they got into these trades, but that is just formal. And personally, I think I did get involved in one or two trades along the way, but not as hugely involved as I would have loved to. So in such situation where you see the momentum burst into the market, or the momentum of volatility kicking in, I think the best course of action is just to wait for price to play out. Just wait for this price action to play out. There's plenty of fish in the water, so you just have to wait. Just wait it out, and I'm quite sure we will get some good tradable opportunities. So what are we seeing with the with the GBP USD? So right now, price has already tapped into that demand level. Sorry, I think this confuses me a lot. Price has already tapped into this supply level, and from this supply level, what we should be expecting is some form of a reaction. Doesn't necessarily have to initiate that deeper pullback, but at least we should be expecting to get some form of reaction. And this is the reaction that we got. You see, the first time the market tapped into that zone, the reaction that we got, and then it wasn't enough to kickstart that retracement. So we've already kind of already come into the mid threshold of that, and this is the reaction that we are getting. At the moment, you cannot dictate what you want to see. You can only react on what the market is giving you. I don't like the price action that we are getting from this order block, and kind of it doesn't. It's sluggish, and it doesn't convince me that the sellers are ready to commit yet. Okay, so let's just wait for some more price action in regards now to the GBP USD. And looking at the two pairs, USD, Euro USD, and GBP USD, I think Euro USD has a more cleaner price action. So let's just go to the 1 hour. And as you can see, we are following the internal structure of the 1 hour, and this is the area that we were expecting for price to hold. I remember I did send out these setup to my free trading community, and I told them to expect such a similar price action where the market actually, you see, we broke structure to the upside. What we are we pulled back, which is the phase B move. Now from this phase B, what I was expecting is a reaction to the upside, but as you can see, we got that initial reaction, but then the market quickly reversed, which is kind of opposite to what Euro USD was doing. All right. So now going forward, I think for me, GBP USD is not that clean. I would, because at the moment it's giving the price action that I'm getting tells me that we may see the internal protected low getting taken out, right? We may see the internal protected low getting taken out. And the reason that I say that is because, as you can see, the market has been taking out, the liquidity below these lows, all right? Every time the market has been taking out that liquidity below those lows, so it's only natural to expect that these also will get taken out. So at the moment, that is the bias that I'm going with, where I see the market or where we see the price action actually taking out that low. And then, and as you can see, that is already creating that is already creating that bearish trend, kind of a trend to the downside. Okay, so also it's also important to recognize that we do have a low resistance liquidity that is forming right there. Okay, so we do have that low resistance liquidity. Let's just mark that out, and that could also be acting as price magnet. We are just creating liquidity above these highs, and the market, as you can see, isn't taking these highs out, so that could also be acting as a magnet for price. So I'm just right now, GBPUSD for me, it's not the cleanest pair. It's not the pair that I would love to trade. Because of this price action that I'm getting. It's kind of I don't see the intent. I don't see the intent in this market. So I'm just waiting and I'll just wait for it to play out a little bit more before committing to this market. Because right now that demand zone has already been violated, and this is the demand zone that now we are looking to work with. And by the time we get to that demand zone, then the internal trend will have changed now from bullish to bearish. So this will just be a reactionary point. All right, so I think on Wednesday we should be having an update on our midweek analysis in regards to what GBP USD will have done. Let's move to USDJPY. USDJPY, I love it. I love it. And like I mentioned in the previous video, I do think USDJPY is kind of one of those pairs that I've grown to love. And the reason for that is because it is respecting zones like crazy. So this is the daily low, and we have our daily targeted high. We broke structure to the downside, and our expectation is for us to get that pullback into some of these zones and then continue with the dominant trend. And the dominant trend in our case is the bearish trend. Okay, I hope by now you understand why. So I did on Wednesday, I did mention that price is kind of sandwiched in between this daily demand level and this daily supply level, and both of them are S selling to buy wicks, and this is buying to selling wicks, BTS, and this is STB. So we are kind of sandwiched between those two zones, but that also when we look or when we zoom out the price action, we can see we do have this clean and unmitigated zone, but kind of you can say it has already, because this is the bigger zone, yeah, this is the bigger zone and this is the refined zone. So we can kind of agree to disagree that the market actually mitigated this zone, okay? But anyway, looking at zooming out the price action just a little bit, you can see that we also do have this fair value gap that hasn't been mitigated, and we do have this demand order block that has not also been mitigated. But if we are to go with the price action that we are getting from this zone, you can see the market has actually, given us that bullish intent. All right, it has already given us that bullish intent, but at the same time, I do want to mention that in order now for us to get a more confirmed, let me just say that a more confirmed bullish intent, um, then we need to see that high getting taken out, because this was the last area where we saw, and this is the supply order block that we are working with. So that was the last area that we saw the market actually injecting volume to the downside, and that volume ended up breaking the fractal structure. All right, that volume ended up taking the fractal structure. So it's only natural for us to expect if the bulls or if the buyers are committing in this market, then we need to see this supply getting flipped. That is number one. And then number two, we need to see a situation where price actually closes or breaks above that high. So this is the fractal DB fractal high, fractal high. Yeah. So that is the high that I need to see getting taken out for me to be confident that the bulls in this case are committing. Okay, but does that mean that we cannot get a trading opportunity right there? No, and that is why we move now to the lower time frames. So I did send these analysis to my group. If you want to join that group, the link is in the description. Yeah, so now looking at the 1 hour, you can see there was a trend shift. So we were bearish, and then the market took out that high, tapping into the daily supply level. And you can see once we tapped into that daily supply level, the reaction that we got. So now we do have this 1 hourly high that we need to target because the trend is bullish. And I did send out these analysis to my group, and I told them expect such a move once we tap into that zone. And then naturally I would have loved the market to mitigate the defined zone, but right now it seems that we are working with this bigger zone. And as you can see, the market tapped into it quite beautifully, and then this is the reaction that we are getting. So right now, market took that breather coming into that order block, and then now from here you can see the reaction that we are getting. So the way we should trade that, I'm expecting to see you see the market mitigated that zone. So the way that we should be trading that is just to expect another return into this zone, because this is the freshly created zone. Once we tap into that zone, then that is the reaction that we should be expecting to get. This is the 1 hourly targeted high. So that is the 1 hourly targeted high. And by the way, let me just be honest with you. I'm not trading EURUSD. Right now, I'm in the information gathering stage just to see how USDJPY behaves in my zones, or the areas that I'm looking. Is it respecting the trend? Okay, is it respecting the zone? So kind of like right now, I'm forward testing these. I'm forward testing and collecting my data. So far so good. I think USDJPY is really respecting these zones. All right. So that is the price action that I'm expecting to see from USDJPY. If you never got involved here and you never got involved there, then I think should just wait for the market to actually break that high, and then just wait to get involved around there. Okay, but also yeah, I think that is the price action that we should be expecting to get. So this is a fractal high. I think we did after tapping into that zone, looking at it right now, a more deeper level. I think we got that change of character right around there. Okay. So we tapped into that zone, they got that change of character. Then that means that we also should be expecting a situation where we may see a reversal of this market all the way to the downside, especially given the fact that this is a strong supply level, the daily BTS level, buy to sell week supply zone. So let's just wait for the price action to unfold. But if you were to ask me, the market is quite bullish, following all the rules. We broke to the upside, pulled back all the way to the 61.8% level, which is what I'd love to see. And then this is the reaction that we are getting. Market takes a breather. So this is just the reactionary point. Market is taking a breather. Then so systems go for me. This is the price action that I'm expecting until I'm proven otherwise. So that is it for today's for this week's analysis and for this week's forecast. Let me know what you think about this forecast in the comment section. If you like the work that I do, please do share it with a friend. Let's grow as a community. Also, yeah, I think I think that is it. If you do want to join my Telegram community, the link is in the description. Tell a friend to tell a friend. And I'll see you on the next one. I'll see you on Wednesday as we do our midweek analysis episode number 2. Thank you. Signing out. Bye bye.